The moment that changes everything. Imagine this. You've just put your hard-earned money into the stock market. You feel like a genius. Until the next morning. You check your portfolio, and boom, numbers in red, losses piling up. Panic sets in. What just happened? What does P/E ratio mean? Why is the news talking about a bear market? This is how most people lose money. They jump in blind. But not you. Because today, you're going to understand the stock market like the pros. Stick with me, and by the end of this video, you won't just know the terms, you'll know how to use them to build wealth. Let's go. Act 1. The setup. The stock market is a language. The stock market is like a foreign country. If you don't speak the language, you'll get lost. But once you understand it, opportunities open up. So, let's start with the basics, stock and share. 1. Stock versus share. A stock is ownership in a company. A share is a piece of that stock. Think of a pizza. If the stock is the whole pizza, each slice is a share. So when someone says, I own Apple stock, they mean they own a piece of Apple. But how much? That's where shares come in. And here's the kicker, owning shares doesn't just mean you profit when the stock price goes up. Some companies pay you just for holding on to them. And that brings us to something that can make you money while you sleep. 2. Dividends, the magic of passive income. Imagine getting paid just for being in the right place at the right time. That's what dividends are. Certain companies, like Coca-Cola or Johnson & Johnson, reward their investors by sharing a portion of their profits. It's like getting a paycheck without working. And here's the wild part, some companies have been paying dividends for over 100 years. But what happens when the stock market turns ugly? That's where things get interesting. Act 2, the conflict, understanding market behavior. 3. Bull versus bear market. Every investor needs to know two creatures, bulls and bears. When the market is bullish, stock prices rise. Investors are optimistic. Wealth grows. But when the market is bearish, prices fall. Investors panic. Here's the reality, markets always shift between these two. But smart investors don't fear bear markets. They prepare for them. Pattern interrupt, humorous. Think of it like dating. When times are great, you're in a bull market. When things go south, it's a bear market, text messages get left on read, and your portfolio takes a hit. But what actually causes the market to rise and fall? That's where supply and demand come in. 4. Supply and demand, the market's puppet strings. Ever tried to buy concert tickets last minute? The price skyrockets. That's supply and demand. Stocks work the same way. More buyers than sellers? Prices rise. More sellers than buyers? Prices drop. But here's the secret, sometimes the price you see isn't even real. 5. Bid, ask and spread, the hidden cost of trading. Every stock has two prices. Now, what if I told you that you could buy stocks at a discount without doing anything shady? It's called limit orders, and it's a game changer. 6. Market versus limit orders, controlling your trades. A market order buys the stock at whatever price is available. But a limit order lets you set the price you want. Want to buy Tesla at $180 instead of $185? Set a limit order, and you might get it at a discount. Smart investors don't just click buy blindly, they set their price. Now, you might be wondering, what if you don't want to risk too much? That's where the P/E ratio comes in. Act 3, the resolution, using these terms to build wealth. 7. P/E ratio, the price tag of a stock. The P/E ratio, price to earnings ratio, tells you if a stock is expensive or cheap relative to its earnings. A high P/E means investors expect big growth. A low P/E might mean the stock is undervalued. Or a trap. Pattern interrupt, humorous. It's like online dating. Just because someone looks good doesn't mean they're a great long-term investment. But let's wrap this up with the most powerful force in investing. 8. Market capitalization, how to spot giants. Market cap equals stock price times number of shares. It shows the size of a company. Large cap, Apple, Amazon, stable, safer. Mid cap, growing companies, higher risk, higher reward. Small cap, startups, big potential, but also risky. But what if I told you there's a way to turn even small investments into life-changing wealth over time? It's called the power of compounding, and it's what separates the rich from the broke. Click here to learn how to use it to build real financial freedom. Now that you understand these key terms, you're no longer a beginner, you're a smart investor in the making. But knowledge without action is useless. The real key to wealth is time. Clock hands spinning fast. So click here to watch my video on the power of compounding. Because the sooner you start, the wealthier your future self will be. See you there. Thank you for watching. If you like the video, subscribe, like, share.